The following is a presentation of TFNN. It is now time for Trade What You See with your host, Larry Pesavento. Now, Larry Pesavento.
Okay, good afternoon, folks. If you have any questions, it's 877-927-6648. All right, we'll start the show with the prayer hour, folks. I hate to do this, but it's necessary. My oldest living relative passed away today in their late 90s, and she died very peacefully, had a great life. And so give a little prayers to my Aunt Dorothy. Anyway, the thing we want to talk about today, I'm sure, I'll start out with the Chinese stock market. The main reason I'm putting that up there today is because there's some beautiful Gartley patterns that have formed in the Shenzhen market, which is a smaller city outside of Hong Kong that is very big in commercial stuff, and then also the Shanghai market. They're much smaller than our markets, of course, but they do have beautiful patterns, and they formed, major Gartley patterns down here in the Chinese market. So that's something that you want to keep in mind. Now realize that the market for Shanghai is not the market for the United States. They're totally different. And so you want to remember that. They're just different patterns, that's all. Different markets, different patterns, different demographics, everything. Now, the $64 question that everybody asks me every 5 minutes, I seem to get this question asked, and that is, has the Bradley inverted? And I know we're right up here at the area where I said if it gets above these points at 13,200 in the Dow and 1,400 in the S&P, we're right up here. We're creeping up. It's only the S&P and the Dow. The NASDAQ has made the 786 retracement, but if you look at the New York Stock Exchange Index, which is the one that I follow the most, this is not a breakout in the market. I believe that I've said all along that we're going to have a 5-day window on this this Bradley the model that we're looking at. And if you go back to look what happened in April, we were off by 6 days, and we're in the 5th day of this right now. So if we don't start down pretty soon, this certainly does look bad. And, if we have one really big day up, where the Dow's up more than 100, 150, and the S&P's up, 15 or 20, then I'm certainly going to, eat some crow. But right now I just have to stand aside here and see what, see what's going to happen. I listened to what Basil had on his show, and I agree with all of his numbers. I mean, they were just exactly at the same numbers that I'm looking at, and I believe that that we are just in this area where we're not going to be doing very much. Now, I want to put into Tiger TV the chart for the New York Stock Exchange Index because we really, I think, without a doubt, we made a bottom on that full moon day, and the reason why we did is we hit that exact 618. Coming off the low in late July, then we rallied up into August 1st. We came down 4 hard days into the full moon on the 2nd, and now we've come up and made a new high. But frankly, the chart for the New York Stock Exchange Index is not very bullish at all. In my opinion, I mean it's been higher since to the June 4th, full moon. But frankly, I don't see this as a breakout to the upside. The volume is bad, and it just literally, I think this is a top. But I could be wrong, and I'm just want to let you know that when I'm wrong, I'm pretty wrong. So just keep that in mind. But if you're in the SDS, keep your stop working. It hasn't really, gone down very much. And if you happen to be long the VIX, I thought the VIX at around 16 would be, relatively better long-term trade with a stop below the low. Then I would, I would continue to hold that. But we are definitely past the. In fact, this is Wednesday. We only have till Friday, and if the market closes up really strong on Friday, this is going to be some type of a failure in the Bradley that I'm not experienced with, and they do happen. But if it does, I'm just going to be standing aside for a bit, and I'll buy some breaks if we certainly get breaks in these markets. But right now, I certainly can't do that. It's got everything that I'm looking at is bearish. The Dow Jones Transportation, the utilities, the Russell Small Caps is also acting very, very poorly. And I believe that we have a chance here we still have a chance for this top, and I'm not so sure that we have if whether it'll be today or tomorrow. But we've completed a ABCD over the last 2 weeks in the Russell small caps, and it's basically making a bearish Gartley pattern at the 61% retracement. So if you want to look to short something, that's the one to short, and put a stop at it's trading at roughly 800 right now, and you put a stop at 805, and I think it has a chance to to go lower. So we'll see. I mean, it's hasn't really done very much here, but we'll see. I want to cover today. I know it's the commodity show's not till tomorrow, but we really need to keep an eye on this gold market, and also silver starting to move up a little bit. And so both of these are things we like from the long side. They're actually holding up pretty good, and we want to be looking at that. The other one we want to watch a little bit later is to look at the crude oil, because crude oil and gasoline are forming bearish Gartley patterns on the longer-term charts. These are the price objectives that we've been looking for, up around 97 in the crude oil, and gasoline at around, I believe, 310 in the gasoline futures. So these are the ones that I think that I have to cover them today, because they're so important into everything that we look at, and then tomorrow we'll go into more detail on what they what they really look like on a longer term basis. Also on the commodity show tomorrow, we're going to have some pretty good information on the outlook for corn on a supply-demand basis that Rich Anderson from Anderson Capital Management forwarded on to me, because now corn, if you just take a look at the corn crop, and just watch it on TV, what they're showing, you're really going to be looking at something that's quite troubling, because I'm sure they've lost more than 25% of the corn, and that's really what you're looking at. Someone asked a question about a Harry Dent. I believe he's I don't know if he's a market technician or what he does. I know he prognosticates on the market, but he's got a call on the Dow Jones that it's going to go to 3,000. If you'll go back and look at Harry Dent's last book, it was the Dow 20,000 or 30,000 back when the market was going up into 99 and 2,000. So, it's just like anybody else. It's another prediction. I'm not trying to predict anything. All I'm trying to do is make a couple of bucks, on these patterns. And I know that they'll work. They just don't work all the time. And that's the main thing that we're trying to do. Now, someone also asked a question about the Australian dollar, because we talked about that on Monday's show. The fact that it had been making this beautiful pattern with this ABCD pattern coming in at the 106 level, and it's hit 106 that 106 level in the Aussie versus U.S. dollar 3 times in the last several days, and we broke 50 pips to 60 pips each time, and it's going back to that 106 level one more time. So I still think that it's very very saleable up in this area because of the ABCD pattern coming in exactly at the 786, and you don't have to risk, an arm and a leg, on this particular forex pair that we're watching. And the Australian dollar, is related to the commodities, and that's something that we follow quite a bit here on our show that we look at, especially of course on the commodity show tomorrow. But this is the one that we're really following as far as everything's lined up on that Australian dollar. It just lines up just absolutely beautiful. The second thing that I wanted to talk about here, well, I don't think it's the second. I keep forgetting the counting. So I've had I was up quite a bit last night because my sister called me to tell me about my aunt in about 2 o'clock in the morning. So we had a nice chat. I mean, we were expecting her to go at any time, so it was not a big thing. But she was very sweet. Boy, she was just such a nice a nice lady, and helped raise my sister and myself, so it was really good. But we want to be watching the cash index for the S&P because, we're above that 786 level. That was equivalent to that 1390 in the futures, and we're trading at around 1398 now. And the cash has gone up to that 140 and change level. So there's still a possibility that we could turn down from this level. But frankly, it's running out of time, folks. I'm really going to have to, eat some crow here if this thing does not go down, by Friday, because it's going to be very scary. Because if we do break out to the upside, it's going to challenge a lot of cycle work that I've done, over the years. And I know it's not perfect, but when they break like this, it's very, very, very concerning. And let me give you an example of when that happened. In 1999. When the market was going up, the NASDAQ topped in March of 2000. The Dow chart topped about 4 or 5 months before that. And so, at major tops, these things can occur. And so you have to be, very, very careful, and that's why I'm trying to be careful. Now, I hear people talk about the Fed intervening. The Fed's always intervening. They don't bother me. I mean, they don't affect the market, for more than 4 or 5 weeks at a time, 4 or 5 hours at a time. I don't know. I've been looking at these for years. They've never bothered me before. And sure, I might be wrong because of the Fed, but I don't think of the Fed that way. All I do is I look at the chart. If prices are going up, it's in an uptrend. If they're going in a downtrend, then I look at the patterns, and I look at the the cycles that I'm looking at. And right now it says you don't want to be buying stocks right here. And I'm certainly, if I'm wrong, then I will stand aside. The other things that we're looking at are doing relatively well. We've been looking to buy the gold, and that's been holding up really well. The gold stocks have really turned well. The gold stock index has turned well. And, whether this Australian dollar trade works or not, I don't know, but it's a very low-risk trade. So that's something that we want to, follow, and that's what we try to do here, is to give you an idea of what we're looking at, with the particular patterns, that we're watching. Now, someone asked a question early this morning via email about the VIX index, and, we've had a couple of, pretty strong days in the market, and yet the VIX index has done, very, very little. I mean, it's still down there testing the lows, but, it hasn't collapsed like, a lot of people thought it was going to do. So I believe that what's happening is people, because of the summertime or whatever the answer is that we have a chance here for the market to really change. And people say, that the VIX is not a very good indicator, but believe me, I really enjoy Basil's work because, that's one of his 3 dollies. The VIX is one, and then the bonds, and I believe the stock market's the other. Anyway, we've got to take a break here, and when we get back, I want to talk a little bit more about the VIX. 877-927-6648.
In just December of last year, the price of gold was down over 10%. In today's highly volatile gold market, you need someone in your corner that understands the complex relationships that exist within the price of gold, as well as within a variety of gold equities. Whether it's the South African gold miners and knowing how the Rand-dollar relationship will affect their bottom line, or understanding how John Paulson's $5 billion trade in the GLD can move the market, Tom O'Brien gives you the direction you need to become a better trader each week in his newsletter, The Gold Report. With over 20 individual equities covered and almost another 20 on the potential watch list each week, in addition to covering the XAU, HUI, GLD, and dollar, The Gold Report is a great source for any trader that is looking to be diversified in today's volatile gold market. For your 30-day free trial to Tom O'Brien's Gold Report, log on to tfnn.com today. Don't miss out on this great offer. Act now. You take a hands-on approach to managing your investments, and whether you're bullish or bearish on Chinese stocks, the ETFs from Direction Shares are there to help you magnify your perspective. Bull ETFs for a rising market and bear ETFs for a falling market. Direction Shares gives you the tools for both sides of the trade. Discover how we can help at DirectionShares.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction Shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction Shares. To obtain a prospectus or summary prospectus, please contact Direction Shares at 800-851-0511. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors employing dynamic strategies. Investors in the fund should understand the consequences of seeking daily investment results, understand the risk of shorting, and intend to actively monitor and manage their investments. Distributor Foresight Fund Services, LLC.
Millionaires are made every day. The fact is, living your dreams is possible. Someone, somewhere is going to get rich. My recommendation is, let that be you. Each day, someone is making the decision to better themselves and creating a plan to fulfill their financial dreams. Let that be you. The key to turning dreams into reality is to take massive action. Let that be you. I'm Steve Rhodes, co-host of the Money Master Show with Tom O'Brien, seen daily at TFNN, and I can help you with your journey to great wealth. I'll show you how to create the ultimate financial edge, a set of tools, insights, and strategies that are part of my daily newsletter service, Mastering Probability. You'll have direct access to me by phone, email, and my private library of trading and investing secrets for 30 days with an unconditional money-back guarantee. I'll take your trading to the next level. Click on my name, Steve Rhodes, on the homepage at TFNN.com and turn your dreams into reality. Mastering Probability, folks. Let that be you.
Kate Stalter's exciting newsletter, Low Price Leaders, has just launched, and now is a great time to get a 2-week free trial. Every Wednesday afternoon, Kate sends out her weekly newsletter to her subscribers where she focuses on small cap stocks with market caps under $2 billion, as well as low-priced equities with share prices ranging from $5 to $12. Kate tracks a variety of stocks with a combination of strong technical support and solid fundamentals. Many of the stocks featured will be recent IPOs. These newer issues are often some of the biggest price gainers in the market and provide an excellent opportunity for substantial gains if timed correctly. You can catch Kate Stalter live on Tiger TV with her Small Cap Roundup every Tuesday and Thursday at 11 a.m. Eastern Time, and visit TFNN.com right now to get your 2-week free trial to her brand new newsletter, Low Priced Leaders, while locking in the low introductory monthly rate of only $37.50 per month, almost a 50% discount. Act now.
This segment is brought to you by Great Panther Silver. For more information, just click the Great Panther Silver banner on the front page of TFNN.com.
Okay, we're back, folks, and we were talking about the VIX. Actually, the three dollies that, or the three little bears that Basil talks about are the dollar index and the bonds and the U.S. dollar, the VIX, the bonds, and the U.S. dollar. Those are the ones that he talks about, and that really is important. Especially, well, all of them are important, but the VIX index is the least probably understood, and very few people actually trade it. But it is a pretty good indicator of people being either bullish or bearish, and there is a lot of complacency, on the bearish side right now. Whether that's going to accept itself later, I don't know. Now, I've also posted into Tiger TV the daily chart of the NASDAQ, and as you can take a look at it, we're making a 786 retracement with a beautiful Gartley pattern up in here. We did hit that 618 for 4 times over the last several months, and this past week we broke out above it, and now we're going up to the 786 level. And another chart that we follow occasionally with the stocks. I don't do a lot of stocks, but one that I follow quite a bit because it basically controls the whole world, and that is Apple Computer. I guess it's still a computer company. I don't even know. I guess it's just called Apple now. Anyway, the chart for Apple is showing that same AB equals CD pattern, that we had when it was down at the $530 level. And now we're making a another one up here at this 623 level, and it could continue to go a lot higher, because if it breaks out above the 630 level, you could actually just go quite a bit higher. You could go up into the 650, 660 level, but right now we're coming into a spot where if you bought it down there when we were talking about it at that 575 level, which was a Gartley pattern, this would be the area where you'd be taking the last part of your profits if you were doing it. Now, I'm not in this stock. All I'm doing is, some people ask me questions about it, and that's it. My job is basically I trade, Forex and futures. We trade more Forex than anything else, and then we have about 8 or 10 futures that we follow religiously. That we're in quite a bit. And of course, we are long the gold. We're not in silver because it's a little too thin, but we do like the gold market. Every bottom that we've had in gold has been higher over the past several months, and this is a really positive sign. All we need is a really good move, and a good move at any close above 1635 per ounce in the gold, I think, would really start to bring the gold bulls back into the market. And it could be related, to what's happening, with the U.S. dollar. Because if the U.S. dollar gives up the ship, then then we're going to be looking at some higher prices, I believe, in the precious metals, because people will start to move, in that direction. Now, we have a smaller break coming up here in just a few minutes, and after we get done with this break, I would like to cover the U.S. dollar, more in depth. But if you'll bear with me, we'll just take a quick look at it, of where we are over the last 6 or 7 weeks, and we can do that by looking at an hourly chart, and we're very, very close to that ABCD Gartley pattern that comes in around the 82 level, and that's very, very. We hit 82.10. Yesterday, and so keep an eye on that breaking of 8,200. People think it has some magical quality to it, but it's basically one of the first ABCD patterns that's very clear that we've had over the last 6 or 7 weeks, and so you'd certainly want to be buying the U.S. dollar at that time. That will most probably be equivalent to the euro if euro can get up into that 126 level, and the euro is trading under that right now. But if it can get there, that would be a place to, that's one of my first places that I would be looking at the euro to go short. So the key thing in the U.S. dollar to watch is the 82 level, and I'm really, that's one of the things we're really focusing on here, because we had a really strong move into late July, and now we've had several weeks of sell-off, and it's certainly come down very, very nicely in a beautiful AB equals CD format. So 8,200 in the U.S. dollar index is one of the key things that we're looking at. If you take a look, now the real problem here is that if you go to a longer-term chart on the U.S. dollar index, and I think this is something that you have to keep in mind. Now remember, when you're trading a 60-minute chart, you're not looking at a weekly chart, but you look at the weekly just to give an overall view of what could be happening. And we've had a very nice Gartley pattern sell side that came in at that 84 level. We highlighted that many times that was a high. Anyway, we're going to take a little break. We'll come back. We'll talk a little bit more about the U.S. dollar. Any questions? 877-927-6648.
Would you like a personal update from Tom O'Brien as to what equities he's trading and what his daily trading plan is before the market opens each morning? Every market day, Tom O'Brien sends out his daily newsletter, Market Insights, to hundreds of subscribers that rely on his daily recommendations when it comes to navigating these highly volatile markets we're dealing with. As recently as May 21st, Market Insights subscribers closed out all 5 open positions for a combined profit of over 68% in one day. Profits ranged from 6.5% to over 24%, and all of these trades had had been initiated within the previous 30 days. Now is the perfect time to get a 2-week free trial to Tom O'Brien's explosive trading newsletter, Market Insights, an $85 value. Tom breaks down the market each morning with his Market Take and provides trade recommendations including precise stops and target profit zones, leaving nothing left to guessing. Log on to tfnn.com today and sign up for your 2-week free trial. Make sure you're a subscriber the next time Market Insights subscribers close out multiple winning trades. Take action and sign up for your free trial today. Has the current market volatility continued to stop you out of trades when the market spikes against you? Now is the perfect time to open up an account with Nadex. Nadex, the North American Derivatives Exchange, is a brand new, completely regulated Chicago-based exchange, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their completely free trading platform, which also features real-time charts and full customization capability. One of the advantages of trading with Nadex in volatile markets is that your risk is always capped and you have the ability of keeping your trades open even when the market spikes against you. Nadex is completely brand new with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com. Or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors.
Put the power of the Chapman Wave methodology to work for you. No matter what market you trade, what time frame you trade in, or your trading style, the Opening Call, Basil Chapman's daily market newsletter, is bursting with the information and trades you need to become a more successful trader.
I've been using Basil Chapman's Chapman Wave methodology for several years now. His Chapman Wave can be used for any time period for not only equities, but futures, currencies, commodities. I've been also a subscriber of his Opening Call, which I find an invaluable tool to help me analyze the potential of the market each day. He gives you opportunities to go short and long. It includes recommendations on stocks. I strongly recommend people using the Chapman Wave, and I very, very strongly support the use of his Opening Call.
To find out more about Basil Chapman and his Chapman Wave methodology, and to get your 2-week free trial of the Opening Call, a $64 value, visit tfnn.com today.
In just December of last year, the price of gold was down over 10%. In today's highly volatile gold market, you need someone in your corner that understands the complex relationships that exist within the price of gold, as well as within a variety of gold equities. Whether it's the South African gold miners and knowing how the rand-dollar relationship will affect their bottom line, or understanding how John Paulson's $5 billion trade in the GLD can move the market, Tom O'Brien gives you the direction you need to become a better trader each week in his newsletter, The Gold Report. With over 20 individual equities covered and almost another 20 on the potential watch list each week, in addition to covering the XAU, HUI, GLD, and dollar, The Gold Report is a great source for any trader that is looking to be diversified in today's volatile gold market. For your 30-day free trial to Tom O'Brien's Gold Report, log on to TFNN.com today. Don't miss out on this great offer. Act now.
This segment is brought to you by Crocodile Gold. For more information, just click the Crocodile Gold banner on the front page of TFNN.com.
Okay, folks, we're back. We were finishing up with the U.S. dollar, and I posted into the Tiger TV the U.S. dollar index on the daily basis. Now, you have it on the 60-minute, and you also have it on the daily basis and also the weekly basis. And so we want to watch 8,200 in the U.S. dollar index. That's going to be equivalent to the 125 and change in the euro. And I've also placed the euro into Tiger TV, so you can see the big AB equals CD. This is the major ABCD correction in a bear market. And as Gartley said, when you have these ABCD corrections in bear markets, you sell them. And if you have ABCD corrections in the market, you buy them. Now, the next market that we want to move to talk about, because we're getting very, very close to the target, and we mentioned it earlier in the show, and that is the crude oil. Crude oil, we made that beautiful butterfly bottom down there at that 77 level, back in late June, and now for the last 6 weeks we've been, rallying very strongly. We're coming up very closely to the 61% retracement up here at 97. We have two AB equals CD patterns coming in at right around 96. This pattern is very similar to what's happening in the Australian dollar. And so whether it's related to the Australian dollar, I don't believe that it is, because there's not that much oil in Australia, as I know. But, we are having a completed pattern in here. And this would be one that would be good for, quite a few cents, I believe. Because if we get up to that 96, 97 level in the crude oil, we want to be watching it very, very closely, for a place, to go short. Now, we're in the middle of, the summertime, vacation periods, and we are also making that same type of pattern in the gasoline futures. And, the bullish butterfly, that we had in the gasoline futures, several weeks ago when the crude oil was bottoming, is now completing a bearish Gartley pattern up at the $3.11 per gallon level. So we got 10 cents to go in gasoline, and we have about $3 to go in the crude oil. So these are ones that we want to watch closely. I'll go into more detail on these on the commodity report tomorrow, because we've got so many things going on in commodities nowadays that you could probably do a 2-hour show and not get anything done. But the gasoline futures is a really nice pattern. It's fulfilling. It's just, ABCD, 618s, all of these patterns have certain, characteristics that we look at, and this is also, forming the way that we want it to do. Now we have to get to the one that I've been watching, for many, many months now, and that is our Treasury bonds, because we've hit some major support in Treasury bonds. It's at a place where we could literally, have some type of a monster move, to the upside if this can hold the 147 level. Right now we're trading at the 148 and change, but we had a very nice support level hit yesterday down at that 148 level. That was a nice AB equals CD on the daily charts, and it held up extremely well. It made a bullish Gartley pattern at that point. It was exactly at the 786 level. So this level that we're looking at right now is a perfect Gartley pattern. But if we go below 147, which was the low we made in past June, that means this whole thing of lower interest rates is going to be a figment of somebody's imagination, because it literally is going to look a lot different. But the T-bonds have completed an ABCD pattern over the last couple of weeks, and they should rally from here. That might be a reason for the stock market to go down. I look at each one separately, so I don't really know. So we'll see that, and you'll be able to look at what happens. But this 147 is really strong. All you have to do to go to see how important it is if you go back to look in October. We came down and we tested the 382 level at that 135 level. Then we went up and we tested the highs, and then we came back to that 135 level one more time. And so this is why it's going to be very important to watch the 147 level, because if it breaks, and breaks with a lot of volume and a big thrust to the downside, they've got some boys on the wrong side of the market. And it could be the Fed, it could be anybody. But this is what happened to Long-Term Capital, which was a big hedge fund back in 1998. They could do no wrong. They had Nobel Prize economists on their board of directors. I think there were 2 or 3 of them on there. John Merriweather, who was supposed to have the golden touch, and they couldn't do anything wrong. And basically, they went bankrupt. The Fed had to bail them out just to keep liquidity in the market, because they were overloaded on one side, and they had no way to anybody to get the other side of the trades. And that could very easily happen again. And if you don't believe me, just listen to the news any day, because if it's not Knight Capital, it's MF Global or Bank of America or the LIBOR situation with HSBC. There's so many things going on political that you almost have to watch TV just to see if your money's going to be safe. And that's a major problem. I understand now that the people at MF Global, of which I happen to be one, were supposed to get some of our money back eventually. I waited 10 years to get money back from Stotler and Company, back in the 80s, but I don't know how long it'll be this year. But J.P. Morgan found that they owed them $700 million, which was about half of the $1.2 billion that disappeared. But we'll see if anything really happens. The smaller accounts, I watched I watched a show on TV Sunday. It was a replay of the CFTC investigation on the Senate floor, and they had Gensler and a couple other of the dancing Elmo Tickle Me Elmo people, and it's amazing how they act. I mean, it's just like nothing really happens, and they don't put anybody in jail, they don't chastise anybody, and yet somebody robs a bank here in Tucson for $38, they get life imprisonment. So I guess the more you steal, the less you have to worry about anything. So just keep in mind that you got to be really careful in these days, and we'll see. I'm not. I should shut up because this business has been really good to me through the years, and I've been through a lot of different things as a learning experience. But frankly, it's really getting scary now with all the things that are happening. I look back and I talk to my friends and I say what's really happening here? Why are these things happening? And I think it's just lack of interest by either the public or Congress or whatever it happens to be. I think it's just some type of a sickness. I don't know what it is. Maybe it's got to be a change in what's going on in all of our political environment, and I'm not even sure if that's going to happen because it takes a lot of different things to change. I'm on my soapbox, folks. That means I must be overtired. I'll jump off and get back to the markets a little bit here. We need to take, we talked about the Treasury bonds. We want to take a look at the Treasury notes because those are the shorter term ones, and those are the ones that have been the strongest, and they also have completed that same type of pattern that we're looking, which they should because they're all interest rate related. Now, the notes did make new highs when we went into this last move, whereas the Treasury bonds didn't, and that's a major divergence. And so if this continues to do this, we're looking at something that is going to be very, very sinister. But we've come right down to the 61% retracement in the Treasury notes. We've hit the 786 retracement in the Treasury bonds. So this is why we're at such a critical level. And we're still basically unchanged today. So there's not much really happening. And if they break really badly today, this would probably give impetus to stocks to everybody to buy stocks, and then away they go. So we'll see. Anyway, this is where we stand. If we get below that 133 level in the Treasury notes, and we get below the 147 level in the Treasury bonds, then we're looking at possibly the major trend change where interest rates are going to go higher and not lower like everybody thinks they are. Now, I know that people think that the Federal Reserve, controls everything, and they do because they have so many operations. But the Fed can make mistakes. I mean, none of those guys have ever had not none of them, but Bernanke has never really, worked had a regular job. He's always been in a university or anything. He's never owned his own company. He's never had his own employees and stuff like that. He's always signed, the back of the check. He's never had to sign the front of the check. And it's not his money. And I know he's really smart and everything, but the guys at Long-Term Capital were really smart too, and they messed up. So I think something is coming down the road here where someone is going to be put to the test, and their foot is going to be put in the fire, and someone's going to have to yell uncle. It'll probably be me, but I've yelled uncle so many times, I get used to it. I can say it in about 6 different languages, so that's not a big deal to me. Now, we need to get to the gold market, and one of the things that we've been talking about, for several weeks now has been the, Newmont Mining and the XAU trade that we've been watching. We've had that big ABCD. We had a 3 drive to a bottom pattern in the Newmont Mining that finished in May. We had the big run up, and then we had a beautiful AB equals CD to the downside, coming into late July, and that's when, it was a week or so ago, we started to look at the long side of this at 44, and we've had about a 10% move on the upside in Newmont, and I think because of the way it's acting, it's up really strongly today, and I think we got a real shot at this thing going higher. So we'll wait and see. No matter what happens now, you want to put your stop below your entry point, which would be down there at that 44 level, and that's you don't want to take any risk at this point. This would be a really bad move down in gold if this were to happen this way. But frankly, this is setting up relatively well right now, and you can same thing happening with the XAU. That's also one that we have been looking at very, very closely. Unfortunately, I just hit the wrong button, which is typical of being on a radio show when you're under a great deal of pressure. You'll see I'll put the one for the XAU up, and we were looking at that. That also has moved about 10% in our favor. And, again, you don't have to risk very much at these levels because, we've got a chance for it to go, a great deal higher. I believe we're looking, it's trading at 157 right now in the XAU, and our target is going to be up around the 180 level. For sure. So just if you're long the gold, stay long. If we get a good break in the gold, I'd look for a place to buy it. I really think it's got a chance. And I've been bearish gold for a long time until we hit that 150 or 1522, and now we've had those 4 higher bottoms, all along. So we finally have someone help the old cowboy out. We have a call from Odessa, Texas. Don, are you there?
Yeah, it's Odessa, Florida, though.
Oh, there's an Odessa, Florida?
It's right outside of Tampa, just north of Tampa.
Oh, yeah. What can I do for you, my friend?
I am looking for an entry point for natural gas. Wondering if you have your thoughts on that.
Oh, sure. I'll be happy to do this, and then tomorrow I'm going to be covering it, a little bit more in detail because we have a situation where we've got longer-term charts and shorter-term charts to look at. But right now we'll look at the daily chart, and we've come down from the high, and actually I still think we got a little bit more to go to the downside on this. Let me draw this in, and I will show you what I think is going to occur. What you want to look for when you're following markets, you want to look for repetitions. Don, that's really what we're trying to do. So what I'm going to do is to show, if I can get this thing to move in the correct. There we go. I got it moved. What I'm going to do is I'm going to put it into Tiger TV, and you're going to see that the market back in May, came down very hard into the 61% retracement, and now I'm looking for an equal move to come down, and it's trading at 219 right now per cubic feet, and if we can get it around 270, down about another 22 cents,
okay.
That's where I'd be looking at. That would be very close. Yeah, that's where I'd be watching it.
That's exactly what I was thinking, too. Just wanted to get a confirmation from the pro.
Well, he wasn't here, so I hope I helped.
Thank you very much.
You bet. Thanks for calling in.
Bye-bye.
Bye. This has been a tremendous move in this natural gas after we had the butterfly bottom that we occurred way back in April that we were watching, and then of course we saw that pullback that we had at the 222 level, which happened to be the page of the Gartley book, and so that's why been watching. But we'll have more to cover that more on the upside, so we'll be able to see it. Okay, we've got a call from our friend in Singapore. William, are you there?
Yes, I'm here, Mr. Pesavento. Good afternoon.
How are you? What can I do for you?
Oh, yes. I was looking at the GLD as you were talking about gold just now. I was looking at GLD, and I look at from last year high on the 6th of September to the 26th of September. I take that as AB, and then I plot the CD, and it will give me a target of approximately of 144, right? And we did not reach there. We probably reached around 148, and since then we are having a higher low. Could I say that the target has been reached, and then we might actually in looking for the up move?
Yes, I really believe that's what's happening, William. And if you'll stay with us, I've got to take a little break. Hold on here, and we'll talk more about it. 877-927-6648.
If you're an investor looking for a great weekly investment newsletter, then now is the perfect time to try out Ken Shreve's Ultimate Growth Stocks. Every Tuesday, Ken breaks down multiple sectors in his weekly newsletter, Ultimate Growth Stocks, with a full in-depth report including specific trading recommendations within his model portfolio, charts, sector analysis, upcoming economic data, along with intra-week trading updates on newsletter positions whenever the market dictates. Right now, you can receive a full month, that's 30 days, to evaluate Ken's newsletter free of charge to see if it fits your trading plan. At less than $75 per month, Ken provides you with his expert trading advice that can pay for itself in no time. Take advantage of this great offer by signing up for a 30-day free trial to Ken Shreve's Ultimate Growth Stocks today. Don't let this offer pass you by. Visit the front page of TFNN.com and sign up now.
With the launch of Tiger TV, TFNN has brought our programming to the next level. With Tiger TV, you can gain access to each host's charts and computer screens as they host their daily stock program. Whether it's Tom O'Brien, Steve Rhodes, Basil Chapman, Ken Shreve, Kay Stalter, David White, Larry Pesavento, Victor Jones, or Terrell Martin, you can catch all of our technicians hosting their programs live and archived on Tiger TV for your viewing pleasure 24 hours a day, 7 days a week. If you haven't checked out Tiger TV, then visit TFNN.com and see what you're missing.
David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today.
Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen live during those shows, and have access to all those charts. You can test drive the Tiger's Den absolutely free for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com.
Are you looking for a precision edge in the market? Something that can stack the odds in your favor? Then look into Larry Pesavento's new trading newsletter, Patterns, Profits, and Peace of Mind. In each weekly issue, Larry explains what's going to happen in the markets based on the pattern he sees developing and gives you actionable trade ideas based on those patterns. Plus, you'll get his detailed analysis on a variety of markets and sectors, including stocks, treasury bonds, the gold market, oil, the dollar, the forex market, and more. And you'll get the Technical Corner segment, which is a short but powerful weekly training session on trading. You'll get access to all the patterns Larry is seeing in the markets, plus the Astro Harmonics and powerful Bradley stock market model that Larry utilizes for less than $5 a day. An extremely potent combination that will give you just the edge you've been looking for. Try Patterns, Profits, and Peace of Mind absolutely free for 2 weeks. Go to TFNN.com and click on the free trial link at the top of the page. That's an $85 value, yours free when you register right now. Get Larry's Patterns, Profits, and Peace of Mind and get the edge you've been looking for.
This segment is brought to you by TFNN. Test drive all the newsletters for free at TFNN.com.
Okay, folks, we're getting ready to wind up the show. We're still on with William from Singapore. Hi, William. I looked at the GLD, and it looks
breakout gains.
It looks like we are completing an ABCD up at this 161 level in the GLD.
Okay.
And I think we've had higher bottoms now for the past, 8 weeks or so, and so it looks like it's going to be heading higher. That's what it looks like to me.
Okay, so that means we can actually put up a setup for a long entry for the GLD, right?
Yes, but you want to buy it on a retracement. I don't like to buy strength, but that's just my preference.
Okay, but if it's a retracement, where is the right place or good place that I can look at for this setup?
Well, watch for about a 3-day pullback. Wait for it to come down like 3 days in a row, and then look to buy it at a 61% retracement off the previous low.
Oh, okay.
But give it a few days because we're up 5 or 6 days in a row. So let it come down about 3 days and try to buy it then. And look at the third day. That'll give you an idea of where you stand.
Okay, got it.
Okay.
Thank you very much, Mr. Pesavento. Thank you.
Thank you, William. We have a final caller from Lexington, Kentucky. Are you there, Robert?
Hey, Larry. How are you doing today?
I'm okay, thank you. How are you?
Oh, great. I just want to say I respect you having your stops in place to protect yourself should the market be breaking up to the top side.
No kidding. I've been banged around a few times over the years. I try not to let that happen again. Sometimes I'm a little more stubborn than I should be, but that's just the way I am.
Oh yeah, but I have a ABC that goes to 14.15 on the S&P.
It sure does. That's the one that scares me the most. And if it gets there, I'll try it again. But we're running out of time. That's what I'm looking at, you see, because I've based this thing on the Bradley model with a 5-day window, and this is the 5th day of the 5-day window. So the most I can give it is, Thursday and Friday. And if it's, like this, then I just have to sit there. Remember the old Chinese adage, Robert, death by 1,000 cuts? That's what I'm setting through right now.
Well, I'm basically the same position as you, thinking that we're near a top. But I'm rather excited. I want it to go to that 14.15 or a little bit above, because that's where you draw in new longs and you drive out all the shorts, and that's like the ideal place to turn around and head down, because then all of those participants become fuel for the selling fire, right?
Yeah, especially if it were to gap up there, on some type of an unemployment report, or Obama decides not to run for president, something like that would get the market to rally. So if something like that would happen, you'd get up to that level pretty easily. But we're lagging so badly in the NYSE, which is the really big market, because that's thousands of stocks. And anyway, we'll have to watch it. Anyway, we're coming to the end of the show, Robert. Thanks for calling in.
Oh, sure. Just one more thing. I had an ABC down on the VIX to 1481.
Yes, sir. That certainly is. Okay, everybody. Thanks for calling in, and may God bless.